Tired of feeling like the tax agent is lurking behind every corner? Behind every trade? Don't worry, you are not alone. In this video we are going to explore some smart and completely legal ways to keep more of your crypto gains in your pocket and less in King Charles's. Whether you're hodling, trading or just getting started, we've got you covered with tips to help you stay compliant while saving your hard-earned coins. Let's dive in. Before we explore how to avoid crypto taxes, it's important to know how UK crypto taxes actually work. What counts as a taxable event? A taxable event is basically any action that triggers a taxation, and in the UK this includes selling your crypto for a pound or another fiat currency, trading one cryptocurrency for another one, using your crypto to buy goods and services, earning crypto through things like staking, mining and airdrops. For more details on what exactly is taxable and how to calculate it, check out our UK crypto tax video, it's linked in the description below. Tip number 1, hold your crypto. When you hold your crypto without selling it, you don't trigger a taxable event. In simple terms, holding onto your coins means you don't have to pay any taxes just yet. The longer you hold, the more time you have before the HMRC comes knocking. This strategy works well for anyone who believes in long-term gains and doesn't need immediate liquidity. Next up, take advantage of tax-free allowances. In the UK you have two main allowances. The capital gains allowance, which lets you make up to £3,000 profit before paying taxes, and the income tax-free allowance, which is £12,570. Keep in mind though that the income tax allowance includes all income generated from different sources, not just crypto. So if you have other income streams like a salary, freelance work or anything else, this allowance will apply to your total income. Using these allowances can help you legally reduce your overall tax liability. And one more thing, you can make even more out of it if you have a civil partner or spouse. Tip number 3 is gifting your crypto to your spouse. This is a great way to legally avoid taxes. Why? Well, transfers between spouses are tax-free in the UK. Plus, your spouse also has their own income tax-free allowance, so you can potentially reduce your tax bill by spreading your gains. Teamwork makes the dream work, right? Another clever strategy is to invest indirectly into crypto using ISAs, individual saving accounts. Now, you can't put Bitcoin directly into an ISA, but there are crypto-related funds or stocks that can be held inside an ISA. The benefit? Profits made within an ISA are completely tax-free. It's a great way to stay in the crypto game without paying taxes on your gains. At all. Zero. Null. Another way to reduce your tax liability is through charitable donations. If you donate your crypto to a registered charity in the UK, it's tax deductible. Not only you are doing good, but you are also reducing the amount of tax you will owe on your gains. Tip number 6, don't forget to use your losses to offset your gains. If you have had a rough year in crypto and ended up selling at a loss, you can actually use those losses to reduce your capital gain tax you owe. For example, if you made £10,000 in gains but lost £3,000 in another trade, you only have to pay taxes on £7,000. Losses are never nice, but at least they can help you reduce the tax bill. And keep in mind that unused capital losses can be carried forward and used again in the future, reducing capital gains taxes on future profits. And one more important tip, always keep track of your transaction fees. Whether you are paying gas fees on Ethereum or covering transaction costs on an exchange, they can be deducted from your overall gains. That means you may end up owing less tax than you initially thought. So don't forget to include these costs when calculating your profits. The good news is that your crypto tax software can easily track these fees for you, making the process much easier. And before we wrap up, here are some important tips. Always keep accurate records of all your crypto transactions. This will make filing your crypto taxes a whole lot easier. Consider getting professional tax advice to ensure you are fully compliant and make the most of legal options. And don't forget the tax deadline. The current tax year started in April 6, 2023 and ended in April 5, 2024. If you are doing an online self-assessment tax return, you must submit it by midnight, January 31st, 2025. Mark that date in your calendar. Alright, that's it for today. Remember, there are plenty of legal ways to reduce or avoid crypto taxes in the UK. You just need to know the rules. If you found this video helpful, don't forget to give us a thumbs up and subscribe for more crypto tips and guides. Thanks for watching, guys, and I will see you in the next video.